right, so when it comes to high probability setups, there's just a few items that I like to check off my list before entering a trade. So let's talk about them today. There's not many of them, but these things are very important for me before I execute or enter the market, okay? First and foremost, do we have a break of structure, all right? Meaning that the market breaks some means of structure to the upside or to the downside as it was moving, okay? So if the market is trending in the up direction like it is now, you can see where the market is pushing up, pulling back, breaking structure higher, and then pulling back and breaking structure higher. So that's what we're looking for. And when you see areas where the market's either breaking structure to the upside or to the downside, like in this case here to the upside, it's going to more likely create some area of demand, all right? So if we're thinking of or looking at taking trades going long, we need for the market to pull back to a key area of demand. Now, what I like to see and how I like to qualify trades in reference to which ones I want to take, all right? I like to see one item that I like to mark off my checklist is, for one, is there they say a gap back at the zone, meaning an area where the market aggressively pushed quickly away from a either demand or supply area, or creating an area of demand or supply. In this case here, for example, like this area of demand right here. Demand is nothing more but aggressive buying, and supply is aggressive selling. So we have a high right here, and then the market kind of moves down to the downside. As you can see here, it's making low, lower highs, low, lower highs. So, but it's also breaking structure, if you notice, as it's pushing lower, okay? So this is a high here, this is a low here, and what you have in between is what we like to classify as minor areas of structure, okay? Now, when the market breaks this high that it created, okay, this is the high from yesterday's trading session, and it broke it into the overnight session, I should say. Well, I'll take that back. Actually, it broke it once the market opened up. It broke it shortly after 9:30, around 9:50. It broke the high from yesterday. That was a structural break in breaking yesterday's high. So when the market starts to move higher, again, I like to see where the market breaks structure, okay, or has a structural break. Two, I like to see where the market pulls back to a key area of demand where there is a gap at, where there is a zone that has not been tested, meaning that it is a untapped, untouched, unmitigated zone, okay? That simply means when we talk about unmitigated, the market hasn't come back to a zone to where maybe orders are resting on the table and the rest of those orders are possibly going to get filled or not. We don't know for sure. But when we see the market race or push quickly away from an area, we can assume as retail traders that institutions put orders on to buy in this area, okay? And when the market pushed higher and actually eventually broke structure, there probably are orders that are resting on the books that still need to be filled. So when the market comes back to that area, looking to possibly get into a trade. But the thing about it is I mark my zone off of a higher base chart. So please spend some time watching the videos here on this channel, because that's where I go into great detail about how I use chart confluence, meaning a higher base, marking up higher base charts, either 120 or 60 range chart, and then moving down to a lower base chart, scaling down to look for an opportunity to trade. If I'm looking to go long and I'm marking up demand zones where I have a break of structure and then there is a demand left behind where there is a gap. Again, I talk about gaps as well. What is it? What am I talking about? Aggressive areas, aggressive buying in this sense here, where the market didn't come back immediately to the supplies. To the demand zone. After it broke above, it didn't immediately come back. It left a small little gap right here, but it eventually does come back to that area. Then I move down to a lower base chart and I look for rejection, basically looking for the market to where it creates an area of demand, pulls back to another area of demand, scaling down to a lower base chart. So maybe if I'm using a 60, I might move down to a 12 range chart to look for an opportunity to trade, to go long. If I mark up a zone on 120, a lot of times now and how the market conditions are, I may just move down to a 24 range and look for an opportunity to trade, meaning a freshly developed demand zone. Once the market taps into the higher base zone on a higher base chart, I move down to a lower base chart once and see and notice where it tapped at off that 120 or off that 60 range. I'm looking for the market to create an area of demand in which I'm waiting for a pullback on the lower base chart to take my trade from. As simple as that. If you're a little confused, I talk about that and show example after example on multiple videos here on the channel. That's pretty much why I created this channel, was to explain how I trade, the strategy and how I trade, and my means of experience as a trader. Okay, but primarily I'm going into detail about the strategy. And for all those that are elite members, you already know the trade breakdowns really go into detail about the strategy in reference to using supply and demand, trading supply and demand, marking up higher base charts, moving down to a lower base chart, looking for a setup, breaking things down in reference to stop loss and profit target areas, just the full mindset of what I was thinking before I took a trade. So again, figure out the direction of the market. That's first and foremost what I need to really do. On my checklist is mark that off. Is a structure moving to the upside where it's continuously either breaking structure to the upside or creating new areas of demand as it's moving higher? Or is it breaking structure lower to the downside to where now we are creating areas of supply to the downside to where I can look for maybe a short entry, right? So first and foremost, understand, figure out the market structure. Okay, once we got that narrowed down, and I want to see more than likely where the market is breaking structure. Now, sometimes you'll have just like a flat on demand or a supply setup where you don't have a breaker structure. Okay, where the market just creates an area of demand or supply, and you can take those opportunities. But the best trades come from what I've just based on experience, is where the market broke structure. And when it was breaking structure, meaning it took out this high right here, it pulled back, broke this area, this high from yesterday. And once it pulls back to a key area of demand, then we can look to go long and hold that trade, where most times I like to hold it to either where there are areas where there's gaps above, okay, that need to be filled, or an area of liquidity right here, this high that it was created from today around 10:15. So the market comes back here, move down to your lower base chart, look for an opportunity to trade. We have a gap here, it broke structure, pulls back to the zone, move down to your lower base chart to look for the setup to actually go long. Aim for areas to the left hand side of the chart where you may see gaps at, or where there's liquidity resting right above. Okay, so for example, I think I covered this yesterday in yesterday's trading session. We moved down to like move up to the 120 range chart. We are moving higher, okay, and swinging to the upside, okay, as you can see here, from July the 7th to July the 8th and the 9th, which was yesterday. Market pushes up, pulls back, breaks slightly higher. No, I'll take that back. It actually breaks higher than this high that it made right here, and then we get a pullback to this area of right here of demand. And this is a demand zone, okay, a full-on demand zone. The market didn't really break any area of structure to the upside, but it did break. It created an area of demand, aggressive buying to the upside. Okay, there's a difference in structural breaks versus just flat on supply or demand zones. Okay, if the market's moving to the upside and we have structural breaks as it's moving to the upside, then look for, again, pullbacks to those key areas of demand within that swing where the market broke structure. Now, if the market just breaking continues to the upside and there's no break of structure, then look, and it pulls back to just a demand zone, then you can still look for an opportunity to go long. But just be mindful, and the way, personally for me and how I trade, I prefer to see a structure break, then a pull back to a demand zone within that area of the structural break, and especially if there's a high probability zone resting there where there is a gap back at the zone, meaning, okay? So this is a demand zone right here, but what I'm going to move down to now is my 24 range chart. And yesterday around, I believe around 9:40, 9:45, we'll take a look at that now. So I'm going down from the 120 range to my 24 range. So the market, when it pulled back here on the 24 range, this is the zone pretty much right here. It's a big zone. I can show it to you. I'll just make this all charts right quick so you'll understand. Okay. And then back to the 24. All right, see? So this big zone, when the market pulls back into it, that's that 120 range demand zone. What I'm looking for is for the market to create an area of demand, okay? Meaning aggressive buying coming out of a swing to where it's created demand and there's a gap back at the zone now on the 24 range. Because Once we tap into that 124 range demand zone, the higher base zone, we tap into that, and then I see a demand set up on my lower base chart. That's just showing me that we still have plenty of opportunity. The market is still showing bullish momentum to the upside. So right here, boom, the market breaks up. We got aggressive buying coming out of this area off of this swing, and there is a gap back at this area of supply. I went ahead and mark that zone up. Okay, so when the market pushed up here, you see where it come back tick to tick and tap that last bearish candle where it pulled down right here. It didn't tap the top end of that wick there. It pulled back here, but it had a very small area still to fill. So it didn't fill the area. So I just wait for it to come back and tap that zone. When it finally taps that zone, what I'm looking for now, the last part or the last thing I like to see to mark it off my checklist as far as is rejection and confirmation. Break and close of the candle in opposite direction to take the trade. All right, so the market hits the zone, breaks above. So maybe you got in a trade around 20,732. What am I going to aim for? I'm going to look to the left-hand side of my chart. Are there any areas to where the market could possibly fill some gaps in back to the upside? Well, here and back up here. All right, so and there's also liquidity resting at the top end right here, what you can aim for, but that doesn't always mean they're going to go up there and take out that area of liquidity, okay? But they will more than likely, if the market taps into the demand zone off of the lower base chart, they're more than likely going to aim for the high right here, the previous high or the most recent high on the pullback to the lower time frame or lower base chart demand zone. So right here, the market, we get the rejection. Break and close of the candle, aim for this high right here. So if you got it in around 732, you aim for up here around 747. Okay, that's the most recent high. And then you can take out most your trades or most your contracts if you have multiple contracts and allow a runner to run to see if it's going to capitalize and take out that area of liquidity right here. That's 764. If you look back at the 120, that's that high right here. Okay, 764, 765 right there. All right, that's liquidity at the top end there on that pullback from the higher base chart. All right, so again, I'm just looking for, is there a structural break? Okay, if there's not a structural break and you just have a full-on demand or supply, in this case here, this was a demand setup right here because we're moving higher, okay, and not breaking any structure to the downside. We're just moving higher, pull back key area demand. Then I move down to my lower base chart to look for a demand setup again. All right, right here. Aggressive buying, demand, where's a gap at, checklist, mark it off, wait for it to come back to that area, and then where I see the break and close of the candle, I'm going to enter the trade. Just a pretty simple checklist. Either one, follow the trend of the direction of the market. Are we breaking structure to the upside where there's a nice structural break, or do you have a nice demand setup as well? Either one, as long as we're moving higher, works. If you get, just make sure you're getting the rejection by moving down to your lower base chart. Move down to a lower base chart. So we checked off one. Do we have a break of structure? Or do we have a nice, beautiful area of demand? Okay. Or it could be supply if we're moving lower. In this case here, I'm just showing you in reference supply setup. You just do everything in the opposite direction if it's moving and breaking structure lower. All right. Structure break to the upside, demand to the upside. Okay. Then if the market pulls back to that area of demand on the higher base chart, then that's when we move down to the lower base chart. That's all we're doing. And then we're looking for a demand setup to be created and the pullback to the lower base chart demand and waiting for the rejection. That's pretty much it. So those are the items I like to checklist before I take a trade or enter into the market. And that helps me identify high probability setups. Okay. But that's all I wanted to share with you guys. Hopefully that I keep reinforcing this stuff and reinforcing it because I want people to become successful. I want people to be profitable as well and open their eyes up to, lots of different things because I talk about lots of topics. But I go in lots of detail about the strategy and how I trade here on the channel. And if you're someone that's interested, again, because I receive so many direct DMs on Discord, people asking me about how they can become an elite member. It's only $6.99 a month for all those that are asking. For one, for two, you receive the trade breakdowns. That's where I go into detail, showing you in depth, like the trades that I post over on the Discord. The Discord's free. If you're interested in joining the Discord, the link is down in the description portion of the video, as well as the link to become an elite member. They're right on top of each other. Okay. That second link is the link you'll click on to become an elite member for $6.99. But that's a private, setup or community for individuals that are interested in receiving the trade breakdowns where I go into detail. So like the trades that I post over on the Discord, lots of times I'll break trades down, same trades, to go into detail about those setups, talking about, you know, stop losses, where to place your profit, your TPs at, or your target profits at. Also, you know, talking about just basically so you understand what I was thinking and what I was looking at lead up to taking that trade. It helps lots of people out, and people have thanked me from time and time again for making video content like that and going in detail about the trades, because it helps them out. But again, it's only $6.99 a month, not a day, not a week. It's only monthly, okay? But again, it will, you know, it depends on you, but all you're doing is supporting the efforts of me as a content creator, and that's one of the perks and rewards that I give back through the YouTube membership program, okay? So again, the trade breakdowns have helped many. So if you're interested, that link is in the description portion of the video. Outside of that, that's really all I have today. If you're not a current sub, please take the time to go ahead and subscribe by clicking on the subscribe button. Make sure to turn your post notifications on so you do not miss any uploads that where I post videos here on the channel. And last but not least, if you found value in today's video, this is my checklist of the things that I look for and check off before I enter any high probability setup. Please definitely drop a like on the video. Take care. See you in the next one.